Good afternoon, everybody. It's Scott Gillum with ShadowTrader Stock and Options Squawk Box. Tonight I'm going to take a look at a couple of potential trades on two ETFs, the QQQs and the IWM. Because of this reversal that we've had on the market in the last couple of days and the strength that IWM has had, they set up for potential credit trades that we could look for. There is one caveat to doing these trades right off the get-go, and that is we've got a major report coming out tomorrow morning called the PCE, Personal Consumption and Expenditure Report. This is the Fed's #1 favorite economic report, and it comes out before the market opens tomorrow morning at 8:30. Here's some of the numbers expected from large banks: Bank of America, Citi, Goldman, JP Morgan. So their headline number reads at 2.5. That's lower than what we had last month. Their core number, which takes only those core pieces that affect most people's inflationary aspects, is around 2.6. And then the core services, less housing, if we take shelter out because that doesn't change typically month over month, we see a rise that's about to come about on the year over year, but a drastic decline or a drastic divergence between all of these institutions on a month-over-month basis. So you can see what the mean forecast is for a headline on a month-over-month. 0.8 versus 0.5. 0.18 versus 0.2. Or pardon me. 0.18 versus 0.08. And on the core services X housing, a 0.2 versus 8.1. This bodes not very well for the Fed to take a look at dropping rates here on the July report. But it does set up on a longer term basis that inflation is still under control and still going down. So how the market reacts to these numbers tomorrow on an uptick on the headline, an uptick on the core, and an uptick on the core less housing numbers is going to set these trades up. So first of all, let's take a look at the SPY. We've come off of a high back here at the middle of July. Tagged at 50 simple moving average. Bounced up, reversal today. So we're still holding above halfback. Now on the two issues that I want to go through, let's go to the Qs, the technology sector. This one has been hit a lot harder. We've gone through the 50. And actually this tail for today's trading around 2 o'clock tagged at 200 simple moving average on the charts. And we did a quick reversal. Note once again, we're sitting at halfback, or 50% from low to high. We need to see that this continues to the upside for these two setups to go along. On the IWM, this chart is much more bullish. We've had a big move to the upside. Interest rates have dropped. Anticipation has dropped. Value is there. And these small caps have taken it upon themselves to garner a lot more dollars, and the push has been drastically to the upside. You can see we've had 1, 2, 3, 4 gap ups, then a topping tail, too rich, came back down, took out that gap nearly, and now we're bouncing around just above that third gap, sitting here at around the 210 or 220, 222 level. So both of these charts set up for a potential trade. First of all, let's go through the IWM trade. Here's how I see it. On the IWM, we can sell credit let's go back to the chart. We can sell credit down in here should this momentum still carry itself further to the upside. And it should, in my opinion. So if we take a look at a type of credit trade that I would do, I would be selling credit at the 215 strike level, or the 215 price, and capping that off, come here, by buying the 210. So sell the 215 strike and buy the 210 for approximately $1 worth of value. Where does that set up on the chart? Here's the 215. That's right at that full fib extension, 100%. That's also back where we had the first flush, the look below and fail, the 8 EMA, which is now still going higher. Capping that off down to the 210, that gets us just below that 21 EMA and right back down to the second gap up. But how's the trade set up? We're inside of one standard deviation, so we have a little bit of concern, but not much on this momentum. If we take a look at the curve itself, we've got over a 75% probability that we'll keep all the credit. As long as we stay above around 214, we keep all of our money. Second trade. Second trade is a setup on the Qs. Once again, this flush, recovery, reversal, back up to halfback sets up for a potential move back into this consolidation area around 475 with some pretty solid support around the 450. So I can sell credit up here and I can sell credit down here as we make this move back to balance once again in the QQQs. So here's the trade setup on the Qs. Once again, using the August 9 time frame, going out about 2 weeks. All right, selling credit on the underside. Sell the 445 strike, buy the 440. Do that for approximately 65 cents. On the upside, sell the 490 strike, cap that off with a 495, and pick up about 40 cents. You can see we get about $1 worth of credit. Well, $1 worth of credit on a $5 spread is about a 25% return. Now, the way this one works out on a curve look or a risk profile look, sitting right now in the middle of this range, we run into problems if we go above 491. We run into problems if we go below 444. That range on the chart, 444 is down here below support. 491 is above that consolidation area. So both of those trade setups are valid. Again, reminding you, PCE at 8:30 tomorrow morning. First rotation, wait for about a half an hour, see if these setups make sense, see if they give you the value of about a 20 to 25% return. Those are the two trades for you today. Thanks much. Hi there, this is Scott Yellow from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.